We dressed up a little bit for this MTOM podcast today. I'm Paul Yeager. This is a production of the Market to Market TV show and Iowa PBS. We're going to discuss policy, federal financial policy from the Federal Reserve. David Oppedahl is from the Chicago branch of the Fed, and we're going to understand a little bit about how all these Fed regions factor into the larger discussion about the health of the economy and what the Federal Reserve is saying, how things are going. David specifically focuses on agriculture when it comes to land sales, land lending, and who's renting. Those are three big things we're going to cover when it comes to the farming sector as agriculture. Of course, we're going to talk about how things relate to the late 1970s and early 80s when the farm crisis hit, what factors are going in that might be different this time around. And then we're going to ask the three big stories that our farmers need to be watching for the rest of 2026. That's our discussion today as we discuss federal policy. This was recorded in April, and we're releasing it now. So if you're looking for up-to-the-minute updates on anything financial policy related, know that this was recorded on April the 17th. That's my disclosure on what's happening. Now let's get to our discussion. Vermillion, South Dakota, you got to tell me, is that USD or SDSU?
That's the University of South Dakota, the Coyotes, and I grew up there, so I lived the rivalry.
You know the rivalry and live it.
Yeah, one time they were throwing jackrabbits out on the basketball court when I was a little boy, and that wasn't so acceptable.
Were you in town or on a farm?
We were in town.
Okay. What was any connection to agriculture at that point?
My grandparents had been in agriculture, yeah.
Where was that at?
Well, one was close to Humboldt, Iowa, and the other was out in the Black Hills in South Dakota.
Two different experiences.
Yeah, very much so.
One that has a lot of rain, one that it doesn't happen very often out there.
No, and my grandfather had dairy cows, and then he moved into beef later in life.
So you go to college at Wheaton?
Correct.
In the Chicagoland area.
Mm-hmm.
Was economics the study?
I did some economics there, but actually I was a math major.
Is math important in economics?
It is very important in graduate school especially.
At what point did you realize that economics was something that was a calling or a destination for you?
Well, I had enjoyed learning about economics, my entire life. But then when I was thinking about what I wanted to study more after I got a master's degree, I was like, economics, I think, would be a good way to go. And so that's how I pursued that.
At what point did you end up with the Federal Reserve?
Well, I actually did, when I was in my economic program at Southern Methodist University in Dallas, I worked some at the Dallas Fed, and then that was kind of my first foray into the world of the Federal Reserve System, and I ended up coming to Chicago and made contact there, and so that was, kind of the entry point for me then.
To me, it's always I won't say a mystery, but it's a complex setup, and it's by design that way, right?
Yeah.
What is it that each region does or contributes to the overall larger conversation?
When you look at the national economy, one number really can't describe what's happening in every part of the United States. Each region has its own unique characteristics, and so I think the Congress was very savvy in understanding that back in 1913 era when the Federal Reserve started, and they created 12 banks, and each of these regional banks then represents a unique part of the country and brings its perspectives to the national discussions they have in the Federal Open Market Committee. So when President Goolsbee from Chicago goes to Washington, he's talking about what's happening in our agricultural sector as well as the auto sector, which is another one of the key areas that we're looking at in our regional approach to economic analysis.
You might not know this, but the history of the regions, have they changed? Do they swap states as their trades or ever? Because regions change economically is what I'm meaning.
That's a really good question because the economy of 100 years ago is very different than the economy today. And for instance, agriculture was a much bigger share of the workforce back then, and it's shrunk over time to be, obviously the productivity of the sector has been amazing, so we don't need as many workers as we use more tractors and other, precision technology. But so the Federal Reserve System itself had some minor changes a long time ago, probably around 100 years ago when they were establishing the boundaries. But in recent times, it has not changed. So that has created some issues in that you have some parts where the economy is quite small now relative to the, you might have, like for instance, our research director moved out to Philadelphia to be the president of the Philadelphia Fed. Well, they have New Jersey, Delaware, and 2/3 of Pennsylvania, I think. So their district is relatively small, and its presence hasn't changed over time. Whereas you look at San Francisco Fed, and the growth in California and out west has made that to become, bigger than many countries in the world in terms of the size of their economy. The Chicago Fed's kind of maintained its size, but it's still, in terms of agriculture, we're one of the biggest producing areas in the U.S., but in some of the other parts of our, in terms of the population, we've shrunk as a percent, of the U.S. population.
Size is one thing, is influence another. Does one weigh more when the information is passed up the line?
I'm not really thinking it does. When you hear discussions, I mean, every one of the Fed presidents and the members of the Board of Governors, they're all bringing their ideas, and they're all equal members of the Federal Open Market Committee. It's not like, one, I guess the one part of that is official, that the New York Fed president has a unique role because he's always on the voting side of the members. All the other Fed presidents rotate in some fashion. Our president rotates every other year with the Cleveland Fed president. So that's more frequent than the others who rotate every third year. But, you would think someone like the San Francisco Fed president might vote every year too because of the size of their sector, but that hasn't changed. So it's just the New York Fed president. And that's primarily because of the role in the open market operations. They have the financial center there for, the desk that deals with, the market transactions.
So if that's maybe the brain center, there's still the heart and the lungs, the legs, everything else of the body is in all these other parts of the country. You specifically focus on agriculture. What exactly does that mean for you?
So I am in our regional economic team. So we try to understand the larger economy, but then some of us have a specific sector that we've been assigned to look at, and mine is agriculture, where we're trying to analyze the various activities and how our region's agricultural operations fit into the larger picture in terms of both nationally and internationally. Obviously, exports and imports are a big part of the sector now, and that's something that, I'll be looking at, as well as, what the corn and soybean yields are each year. Last year was a bumper year, but sadly the prices were down, so the margins were thinner. And then you look at what's happening with livestock. They're, with feed costs lower, it actually helps them. So it's, the hog farmers in Iowa are happy for that.
They are, but to buy some of those animals is expensive. To even get into the game with the heifers, to not send them down to the market is a big challenge for everybody. When you are looking at what you're doing, when you mention corn and soybean prices and profit, how much is numbers? How much is policy? How much is outlook in determining what it is that you're recommending or reporting as the sector?
Well, we try to keep our pulse on what's happening in terms of, monitoring the various markets, and the numbers are, of course, a big part of that. What the U.S. Department of Agriculture puts out is very helpful in that. And so I'm not needing to be thinking day to day as much. I'm thinking more in terms of the long-term performance of the sector. And so I'm not having to buy and sell soybeans myself, so, but we try to understand how that, the risk management side of it is impacting agricultural operations, and then being able to look at the financial side. And that's one of the things that we do monitor ourselves a little more carefully, in terms of, we do a survey of ag bankers in our 5-state region, and then I report the results in the ag letter. And so that's available on our website now as a product that gives information about farmland values every quarter, whereas the USDA puts those out annually, as does Iowa State University.
Are those questions the same each time you ask them?
We do ask pretty much the same questions for a certain set, and then we have some that we rotate. So some that get at agricultural conditions every couple months, or it varies. And we do just ask once a year about the cash rents in the district, and so that'll come out in the May edition of the ag letter.
I will tell you, a lot of the more popular guests on this podcast are the ones talking about land. It is absolutely a top of mind for so many people. We'll get into rents in a minute. Let's go to the buying and the selling of the land. I just saw a report before we recorded here a couple of days ago talking about the volume of sales. Do you track any of that? And if you do, what is it telling you right now?
I don't track it directly, but I'm listening to the markets and seeing what's happening, and it definitely is a quieter time in terms of the springtime. You talk to any of the people out there that are, conducting the operation, the auctions, and in meeting with the folks, and when the planting's imminent, we certainly see a drop off in activity, but it's definitely slower than it was a few years ago, when there was kind of a flurry of activity.
I get all the time from people about that activity is who is buying. Do you track who's the buyers?
Not specifically in our survey, but we're asking, the bankers about, are they seeing more investor interest and things like that. So we do get a little bit of a report on that, and it definitely, farmers have maintained their presence, and, when a farm nearby comes up for auction, you often see several farmers going after those acres, and but at the same time, you do have some of the various other funds out there that are active, not as much in Iowa maybe as in Illinois. It seems like Illinois, with its, the difference in the legal situation, it's more of that kind of investment focus.
Well, the joke always is, and I don't know if it's a joke or if it's just an anecdote, is when the dentist starts buying the land, and you could argue that it's if the dentist in Wheaton is or in Evanston is buying land somewhere downstate, that might be the top of the market. You ever heard that one?
Yeah, I've heard about that, but right now it's kind of unique in that you have a lot of these data centers coming into various places within our district, and so you hear about sales that are at very high levels. And what's a farmer going to do when he sells his land for, say, $100,000 an acre? He's going to go find some good ground elsewhere, whether it's in the middle of Illinois or somewhere else. And so there's definitely been a lot of 1031 activity, it seems, lately, where they're trying to save on the taxes by buying some other ground right away.
Well, one of the other factors is and the reason I ask is how much you track who the buyer or the seller is that you hear it's the older farmer with cash, and it's probably to what you're just saying there, trying to find a place so they don't have as much income, find another investment. Yeah. I mean, does that track with anecdotally what you hear?
It definitely does. There's certainly that aspect to the market, but just, somebody that had some really good years not that long ago and maintained their working capital and their ability to expand their operation. That seems to be, a lot of the buyers are those kind of individuals that have that knowledge and wherewithal to be able to weather this tougher time now by expanding when they can take advantage of others that maybe weren't in as good a position.
Let's go to the lender then. You mentioned you also talk to the lender. What's their What's the temperature reading on a lender right now of willingness to write anything? A little more cautious? Not at all?
There always seem to be more cautious. So, but they're out there and willing to lend to quality borrowers, but at the same time, there has been a little increase in the number of operations they're not willing to lend to this year. So you do hear about some farms that are still maybe searching for their ability to keep going, and so it's not the worst of times, but it's not the best of times either right now.
You mentioned the Fed's history. You've got records that go back to the 70s and 80s, and you remember the 80s and the 90s and the way things have evolved in agriculture.
Yeah.
Everybody always wants to know, are we setting ourselves up for a repeat of a farm crisis? Are there flags? Are there indicators that get us concerned that we need to be looking at?
There, is certainly a potential there, but it seems a lot more like what we had maybe 10 years ago. Coming off some really good years, so there's a number of operations that are sitting in, very solid position, and there are others that maybe didn't weather things as well for whatever reason. They, didn't market as savvily or whatever. They, they're struggling more. Maybe they just don't. Maybe they cash rent a bigger share of their base, and it's very high numbers for cash rent right now. So it's not like you're, people that the landowners are letting you just use the land for free or anything. So that you have to be able to pay the bills, and so there definitely are kind of some operations that tend to do better than others, as they move through the year. And so there are challenges, but there are some that are doing well.
Because lending rates, amount of debt, prices for commodities, those are the three big things that we look at right away when there's a comparison. And then I'll hear from someone in your position or at a lending institution that will say, oh, no. Our interest rate is much better. The debt load is way different. So we've learned from the past is what it sounds like. But there are still factors. We're just able to weather them more. Is that what I think I'm hearing you say?
Yeah, I think so. And obviously, when the federal government has some ad hoc payments, those are helpful as well. So that's come into play a little bit right now. You think back to the 1980s, there wasn't as much of a safety net as there is today.
You mentioned rents. What do higher rents or lower rents tell you?
Well, higher rents are a strong indicator that the sector continues to generate income, because you have to be able to pay those. And there are farmers willing to bid, but at the same time that you see them kind of maintaining, if not increasing a little bit in the last few years, they are an indicator that, like last year, there was actually a little decrease overall for our district in terms of the reports that we were getting from ag bankers. That does show that it's starting to get a little more challenging, that it's a period where you can't just keep pushing them up. And, obviously, if there's an operation that has a very high share of cash rents, they're the ones that tend to be more struggling right now.
Because their neck is out further.
Yeah.
And if that keeps going up in that factor, and then let alone the input side of things, that whatever spikes happen that they have to navigate. So they are more exposed.
Yeah.
Okay. When you mention other districts, do you have colleagues in other districts that you ever talk about and compare ag sector indicators, reports, numbers? Is that anything you ever do?
We do that, yeah. The Kansas City Fed has a new center for the agriculture and the economy that they've labeled as their kind of flagship for looking at the sector. And so they kind of organize, in a sense, the Fed reports that, they do some ones that are put out. The Board of Governors used to do them, but now the Kansas City Fed has kind of taken those on. So but then we will have meetings with others, from Federal Reserve Bank in Minneapolis or Atlanta, St. Louis, Dallas, some of the others, we've talked over the years as well.
All with different factors influencing all of their regions. You mentioned a couple of those cities, heavy drought right now. Then you mentioned other ones, even more severe drought, which is going to impact grazing, also in that livestock sector that you're just talking about. And then you've got, as the Corn Belt moves north, Minneapolis becomes a little different agriculture picture than maybe it used to be. So that is fascinating from someone like me to sit here and watch how that changes. I'm guessing, has it been interesting, or is it just kind of the way the economy works? Things just change over time.
They do, but it's quite intriguing how they change and why they change. So that's part of the job, is to understand those factors. And you look at things like sugar beets. I mean, that's a fascinating sector as well that ties us in Minneapolis together. There's not so much to the south, but and then you have the cotton farmers that are being told this year that you can't grow cotton because you're not going to make enough money. You should grow soybeans instead. So some of those bankers are, taking a few decisions out of the hands of some of the farm operations, just because if you want the money, you have to be able to follow the directions that are given.
I think the Board of Trade has heard some of that cotton talk because it has had a little rally at certain times. It's a little late to buy acres for this year, but it is of interest to see how that open market works. How much does the markets, you mentioned price, corn and soybeans, wheat, tell me when you get a USDA balance sheet from whatever report that they give, how does that factor into some of the things that you look at?
Well, you try to figure out, what the changes are first and see what that might lead in terms of the, the various usages of the crops. And that's actually something we're going to be thinking about for our ag conference this year in October, that we want to, when you have a bumper crop, where does it go? You think about feed as one of the key things, but when you look at the balance sheet, it doesn't tell you directly how much is being fed to animals. That's kind of a residual that, so it's part of this, there's science, and then there's kind of the, kind of how you massage it to kind of come up with the numbers. So
Whoa, you're talking like one of them farmers that ask me questions all the time. The massaging is always that's the biggest concern that so many have about it, but the market has dictated. That has been the beauty of watching the corn and soybean market and the wheat market, is it usually tells you what's really going on and how much is really out there. Have you found that to be true?
Yeah, I think, it's kind of a verification process. It takes some time over the year to, sometimes the market thinks early on, there's a weather rally, we're not going to have as many acres that are, like right now when I was driving across to come to Des Moines, you could see there were a lot of ponds out in some fields. So how many of those are going to stick around? How many can they plant later? Those questions are important, and the market works through them eventually.
I mean, even if it is early April or mid-April or late April, there's always the sentiment said by the people in the other studio is always, in your guest chair, it's like, we'll get it planted eventually. It's just a matter of how good it is. And then all of a sudden, if it's in late, well, that means we're going to be at trend line yields. And then that factors into all sorts of things. And it is an ever moving set of factors that go into just what the health of the economy is for agriculture.
Well, and last year, I think we got some of the ground planted late, and there was concern about drought, and yet we had a huge corn crop.
Yeah, don't say that too loudly. That's what everybody gets excited about. All right, one of the other things is biofuels. And recently every year there's supposed to be renewable fuel standard, and what's the RVOs and what that level is. How does that factor into whatever that is up, down, sideways, and how you look at what corn usage is and what soybean usage is? How does that factor in, and what type of a share does that take in some of your work?
Well, that's become a bigger share, in the last 20 years. You look at what's happened, and it's, it's pretty incredible how, it's just kind of baked into the bottom line now. And, if we didn't have a strong biofuels sector, that would definitely pull back on the profitability. And now it seems like there's some better numbers for the next couple of years, and hopefully some stronger, usage in the gas, with E15 being a year-round possibility. So that's helping to support the demand side for corn in particular, but also for soybeans as we, have more of those. We'll see what the Congress puts out in terms of if there's another farm bill and when, but certainly some of the biofuels are a key component of helping to keep Midwest agriculture profitable.
And in recent time, also shipping some of the grain to other foreign ports has been a factor, whether it's to China or Mexico or Canada. Policy changes, policy discussions have created some uneasiness among some who are looking for their crop to go to other places. Your role, is it how do you factor in policy or trade discussions in what a farmer may be able to sell or not sell?
Well, there you're trying to think about the various possibilities, and obviously, we as a Federal Reserve representative, we're, taking kind of a neutral view of all the policy implications because we don't propose any of them. We will analyze what the implications are of them, and so we're trying to better understand how that's factoring in, and certainly the the numbers from China haven't been as promising in the last year or so, and so that's been a challenge for the soybeans in particular to find a market, and so that's kind of step back. But at the same time, now with some of the better demand from biofuels, we would expect that would help to offset that to some extent. But soybeans find a market. It's not like they're just going to sit. They're going to eventually find a home, and it's just that the price may not be as high as it was a few years ago.
Because do you see your role as more of a reporter role than a forecaster role?
It is, trying to give an idea on what is happening to our leadership to be able to report that to the Federal Open Market Committee and have as part of the discussion about the regional economy.
Yeah, or maybe analyst. Is that a more accurate term than reporter? I don't want to put you.
I'm a policy advisor
there
technically, but yeah.
So then, how much? I guess I've kind of danced around it a little bit, but how much in hypotheticals do you get into then when you're talking about policy and you try to neutrally look at how things play out? Is it here's scenario A, B, and C? Is that part of what your reporting is?
I'm not really getting into scenarios as much,
okay.
But you try to give a fair view on what is happening in terms of, what the potential, impact might be for agriculture. But at the same time, you're not trying to be a market mover or anything like that. So,
but everybody watches what it is that you're doing. Eventually, whether it's they love to look at the minutes, they look at just any type of hint or thing. So what your work is eventually looked at and parsed very carefully by other people. So trying to have as well informed of an opinion is paramount to what you do.
Yeah, and we do put out the Beige Book every 2 weeks before every FOMC meeting. So the Beige Book helps to, give people a little insight into what we're observing as we try to gather information from our regional contacts and put that together in terms of the various sectors of the economy, including an agriculture paragraph in there that I've been working on. So, trying to help people understand where things are at, and then that should give them some idea on where they're going too.
I know we're not going to talk specifically about anything to do with interest rates, but your organization is way more than just a number. It is information, right?
Yeah.
Yeah.
Yeah. There's all sorts of different research that comes into play, whether it's on the, macroeconomy or the microeconomy, and certainly the agricultural sector is an important component in our region.
Of this region, what else is important right now, or what is a sector you watch that's not agriculture?
I don't watch it as much personally,
Okay.
but the auto sector, obviously, we have Detroit as a branch in our Fed district, and so that's a key industry. But larger than that is manufacturing. So you have a lot of ag equipment being made here in Iowa and across the Midwest, and so that's whether it's the suppliers that are helping the larger companies to be able to produce their products, or other kinds of insurance or other industries that have a kind of a outsized presence here in Iowa in particular. Those are things that we want to monitor as well.
Is ag manufacturing closer tied to the ag economy or to the auto manufacturing industry? Which one does it
I think it's
travel
definitely more tied into agriculture.
Okay.
You do have the larger trends that, but agriculture equipment is being purchased by farmers, primarily. And so it's definitely, it's been softer in the last few years after, having some really, top years.
Mm-hmm.
And so as things have softened, that kind in the ag economy, you've kind of seen that from the ag production numbers, ag equipment production numbers as well. Though it's interesting, if you look at them more recently, they've started to move up again. So maybe there's maybe we've hit the bottom.
Well, Wall Street has not made it quiet that they watch what the John Deere and Cases of the world do, and if they're cutting, that's not necessarily always an indicator of what is to come, but they're preparing. And if they cut some job losses to withstand and still stay profitable, and John Deere has, that Wall Street's paying attention to that as well, and so are you. It sounds like.
Yeah, I mean, you follow the reports and and hope that you have a good handle on the various implications on that for the larger economy. Yeah.
All right, let's close with this. I know that you're not indicating too much of anything with this answer, but what are 3 things that a farmer should be watching for the rest of 2026?
3 things that they should be watching. Well, I mean, the financial conditions are vital. It's going to be what's happening in terms of the the quality of the lending, and that's something we report in the ag letter.
Mm-hmm.
Of course, this isn't out of my purview, but the weather is always number one probably, and and follow those land markets. I guess that's going to be something that whether it's the cash rents or the what people are paying for ground, that's a stable land market is kind of helping keep the floor under the the sector. I think it's not like the 1980s at this point, so that's good for the Midwest as well as farming.
Is the land market on a stable farmlands? Is that on stable footing?
It seems pretty stable at the moment. Our data from end of last year showed a little bit of an increase, but some other surveys show there may be a little decrease in the Midwest, farmlands. So it's fairly stable at this point, it seems.
Yeah. Well, always fun, and always fun to see what it is. So the ag letter is something that anybody can subscribe to read.
Right. It comes out every quarter, and May's the next issue.
If you like policy, that's a place to dive into. All right. David, thank you so very much. Appreciate your time.
Thank you for having me.
The production team at Iowa PBS is led by Sean Ingracia. The crew is Reed Denker, Kevin Rivers, Neil Kyer, Julie Knutson, David Feingold. The executive producer of Market to Market is David Miller. I'm Paul Yeager. Thank you, and we will see you next time here on the MTOM podcast.